to- Hello there. Welcome to Be the Boss of Your Money. This is Mitch Goldberg. Thank you so much for joining me. We're just getting started a minute or two later than usual. Have a few things going on. It's been a crazy day in the market. 4 o'clock is usually 3:45. 4 o'clock is usually my craziest time of day. And a day like today, it spilled over a little bit, but that's okay. We've got a lot to talk about. I'm going to make this quick. We're not going to go through the usual market updates. Suffice it to say, it was a good day in the stock market because, as I said in the announcement for my live today, I said in parenthesis, talk of stimulus talk of, in parentheses, stimulus gets the market going. So that's what this whole day is about. So I'd like to welcome you to Be the Boss of Your Money. This is my live stream podcast where we talk about personal finance, investing tips, business, and other subject matter that is related to those. I want you to be the boss of your money, not your money to be the boss of you. And I know it sounds like a cute, catchy phrase. Well, I think it does, but I really mean it. So I want to give you perspective. I want to share with you. I've been doing this for decades, so I have a lot of knowledge. My biggest problem is I have so much in here. There's just so much, and I just want to put it all out there. So I just have to slow things down, keep my feet in the ground, and just take it one step at a time, right? That is a problem with communication. Sometimes, you know so much and you just want to spew it all out. You don't want to leave people like, what the hell is this guy talking about? I'm more confused after I watch a show than before. So I want you to really feel good about your personal finance when you watch my live stream. That's really important to me. So let's roll the quick intro, and then we're going to get into today's action and what you need to do and how you need to think, especially for the next couple of weeks, because the election is literally right around the corner. So here goes the banner. Here goes the intro. Here we go. And we are back. Thank you very much for joining me. I'm Mitch Goldberg. You're watching Be the Boss of Your Money. It's a serious show about a serious topic. It's about your money. It's about you becoming the best possible version of your financial self. What more could we want for you? Okay. I'm a financial advisor with a wealth management firm, Client First Strategy. If you're watching this in the live stream, welcome. I would love to answer your questions in the comments. If you're joining us in the replay, then I'd like to welcome you as well. And certainly, if you have any questions, hit me up in the comments. As if you're watching this in the live stream, I will see your questions. I will answer them. That to me is actually the best part of doing this whole live stream, is interacting with you. So thank you very much. So did anybody watch the Jerry Springer show last night? It was on all the major networks. It was on cable TV. It was on every station yesterday. About 9 o'clock. Wait a minute. I think I got it mixed up with another show. Grumpy Old Men. Yeah, that was crazy, that debate, wasn't it? I think we all came up with the word shit show during the stream, but during the debate, what a shame. The whole world was watching. We could only grin and bear, right? So we've got decisions to make, but I'm more concerned with how this affects you, the economy going forward. You have decisions to make, and it could very well be that some of you watching this are the people who are going to make investment decisions that could impact you for the rest of your life. I'm going to give you an example. Right after Obama won his first election, his first term as president. Remember this, someone, came up to me who I know and was older than me. He's like, oh, after Obama gets in the office, the stock market's going to go like that. And his 8 years was, I think it was the second or third best 8-year run in stock market history. Is better than the Reagan years. That's how good it was. And then when I know someone who, when Trump won the election, there were a lot of people who sold everything they have and said, I don't want to be in the market. And, they missed a really good rally since Trump has become president. So before you say, well, it was this, it was that president or this president, okay, I'm not getting into that. What I'm telling you is economic cycles are much deeper than current, policies of any political party. It's the actions of the Federal Reserve, long-term dollar supply, economic cycles. These go on and in very long cycles, and presidents don't really impact these cycles as much as people think. And I think we need to get that out of the way. I don't like fear mongering. Oh, if this person wins, the market's going to go up. If this person wins, the market's going to go down. I don't like that, because what I started saying is a lot of people are making decisions based on what they're seeing now, when we know that the key to building your wealth is investing consistently every month, month in, month out, year in, year out, over many, many years, spending less than you make, making sure you are tax efficient in your life. Make sure that you just practice sensible financial habits. That's what's going to create wealth for you over the decades. I call it the get rich slow scheme, and it works. We all have a lottery ticket, the get rich slow scheme. You just have to wait because it's slow. I'm not saying you shouldn't enjoy yourself. I'm not saying you shouldn't have any indulgences in your life. I'm not saying that you should just eat, beans and bread every night for dinner because you want to retire one day. You have to live too. So I just want to make that perfectly clear. I don't like the fear mongering. I definitely did not like what I saw last night. I don't think anybody did, but then when I talk to people about that, they seem to blame one person over the other. I don't get that. There was not a civil debate. The whole world was watching too. And what can I say? But I think it impacts people. I think it's clear that November 3rd is the election, but it's not going to be the day that we find out. When I shake my desk, the camera's a little wobbly, so hands off. I think it's clear that we're not going to know who the president's going to be November 3rd. Looks that way. I think it makes investors a little bit uncomfortable. Today, the stock market had a pretty big rally, so let's just do a quick share screen and we'll get into that. I'm making this pretty quick because I have to be somewhere at 5:30, so I've got to hop off in a couple of minutes. I know you're really upset about that, right? Okay, let's just take a quick look. Shepard Smith is back. He's going to be a commentator on CNBC. Let's take a look. Dow up 329 points. It was a good day yesterday. Up S&P up 227.83%. NASDAQ was up almost 0.75%. Decent day all around. The Russell 2000 had a really good day, up 3%. Okay. The VIX, it's really hard to see the VIX. See, this actually bothers me a little bit. The VIX should have been down. Okay. We don't need to share the screen anymore, but the VIX was up a touch. It should have been down. I think, okay, because the volatility, you want that to be red. You want volatility to go down. The VIX is a fear gauge. It measures basically how much professional investors, hedge funds, money managers, it measures whether or not they're willing to spend more or less to hedge their portfolio. So when the VIX goes up, it's a sign of worry. And it was lower during the day. It came up toward the latter part of the day. And that is because the big story of the day was going to be stimulus. Now, over the last few weeks, I've been on here day after day saying it's going to be a really bumpy ride. It's going to be really tough to get a solid rally and to keep the economy going. And the longer the economy stays weak, the longer I expect it will continue to stay weak if we don't get more stimulus. Right? Unfortunately, that's the position we're in. We just need a a constant sugar high for more stimulus. However, the lockdowns were coming out of those. Even with what's happening in Europe, we haven't, doesn't seem like we're going into lockdowns here in the States. I mean, it's a whack-a-mole approach. So if a COVID spread comes out in a university or in a particular town, local rules could change pretty quickly. And it's just like a whack-a-mole approach. Some people call it a surgical approach. I don't think it's a surgical approach. I think it's a whack-a-mole approach. Wherever COVID pops up, you bang it down with the hammer, and that's what you do. But what I've been saying is it's really hard to fix things. And I don't think the economy is going to really rally until we get talk of a stimulus. Do we actually get another stimulus package? So that started shaping up a couple of days ago, late last week. Pelosi and the Democrats put out another package, 2.2 trillion, lower than what they were asking for, but still higher than where the Republicans were. I think it's a shame. I think they should just take the difference and split it already, instead of negotiating in public like this. They should have just, all the politicians could have just met in private and say, where is the line that we're going to split the difference, and then come out with that package and put it out. I'm asking for too much, I know. So talk of a stimulus over 500 points. And by the end of the day, after like the fifth attempt, the two parties weren't agreeing. In the meantime, like the most rarest of rare commodities that you could buy in New York City is going out of business signs. And it's like that all over the country. Going out of business signs are popping up all over the place. And while, what's that phrase? While something burns, we sing. I don't know. The issue is that the stimulus looked like, oh, hey, we're getting something. Stocks took off. And by the end of the day, the Dow gave up about a third of its gains, because the talk started to fade and there really isn't something there. And of course, the closer we get to the election, the harder it is to do this. And don't forget, there's an awful lot of politicians who are up for re-election, not just President Trump. So a lot of campaigning. People want to be in their home districts, in their home states, campaigning like crazy right now, not having to run to Washington to debate and cast a vote. Okay, so for the month, the S&P was off. So I have my notes here, is off just about 4%. NASDAQ was off over 5% for the month. So first down month for the S&P since last March. However, if you held in there, you are looking at if you started investing in a diversified portfolio of securities. Okay, diversification is a strategy that we use to minimize risk. Doesn't necessarily protect your portfolio from going down in a generally down market. It's a strategy that we use to minimize risk, not maximize gain. The opposite of diversification, having concentrated positions, is a strategy that you'd use to maximize gains. All these things I have to say, and for the regulatory bodies that be. So, if you were diversified by now, you've skated through the pandemic pretty well as far as the stock market is concerned. Granted, this has been really pushed up, held up. Stocks have been held up by a handful of very large super large cap tech stocks. I talk about them every day. I'm not going to mention them now because I'm like sick of speaking about the same stocks over and over. But you already know that. So what I want to point out to you is just a couple of things, and I've got a split for the day. The key to a sustained rally is really a matter of stimulus and a decisive election. It really frightens a lot of investors, the thought of having a severely contested election. And the debate did not clear that up. In fact, it made it worse. And it looks like what President Trump is saying, well, if he wins, then he should win. Of course, he won. He's doing a great job. But if he loses, it's because of the phony ballots. So it's kind of it's a situation where heads he wins, tails you lose. And I think that's what a lot of people are worried about. Some people are going to take that political, what I just said, but I think it's true. You're welcome to hit me up in the comments and disagree. But that's what investors are worried about. Yesterday, we did have some positive news on the drug front. Regeneron's drug helped senior citizens who were in hospitals who are affected by COVID. And Moderna's drug so far seems to be pretty safe as well as effective. Hopefully we'll get something soon. But, this is all so up in the air. And I think that's what's frightening about the stock market right now is that it is so woefully up in the air that nobody really knows what to do. So I'm going to tell you what to do. If you need money, you have short-term cash needs, and you don't have that money set aside and it's actually in the stock market, now is probably your time to take that money out, because money that you're going to need just shouldn't be invested. That's why I say that. It's not a market timing issue. It's a matter of personal finance. And if you are in the stock market for the long term, you will be fine. We will get through this. We will know who the next president is. We will get through this virus. We will get our vaccine going. We'll get some more stimulus going. I'm pretty confident we will get a stimulus package, just that we don't want it to take too long, because once businesses go under, it's hard to bring them back. So we want to get the stimulus before even more businesses go under. One person I know said, something very smart. He said, and I think we know this, but I just like the way he articulated it. He said, listen, the businesses that go under, the restaurant spaces that become available, the commercial office buildings that have to be sold to the banks, all of these are going to wind up as opportunities for a new wave of entrepreneurs, a new wave of real estate owners, a new wave of business owners. And this is what's going to set up the opportunities for businesses, including small business, for the next 20 or 30 years. And I think it's something that we should be optimistic about. Okay, so hopefully that was a good note to leave things out. So I'm going to get going. We do have one comment out there. Hi, Frank. Okay. Hi, Mitch Goldberg. Reports say that they are still far apart in stimulus. Would another failed deal have a big effect in the market? The answer is yes, it would have a big effect in the market. The whole market's traded up the last few days. Even though September was a pretty lousy day, it did have a strong, even though September was a pretty lousy month, it did have a pretty strong finish. And that was because of hopes that powers that be would agree to a stimulus. If they don't get it, and we just had GDP came out today, reported down 31%. Stocks rallied, go figure, right? But that's because the quarter we're in now, and we expect a very sharp rebound, the quarter that's about to end. And we expect a good fourth quarter. So I think the stimulus would keep things going. I think it would make for a much nicer holiday season. I think it'll put money in parents' pockets. They'll spend on toys. It's a very big deal. I don't think the market crashes if we don't get another stimulus, but maybe we'll go back down another 5 or 10% from where we are if we don't get the stimulus. But the market won't completely just sell off and crash and burn back to the March lows if you don't get a stimulus, because people will hold on in hopes of a stimulus. The hope keeps the stock market going. We get past the election. We get past the virus. We will get past this. Boeing starts flying its MAX line of jets again. People are buying houses right now like crazy. In fact, mortgage demand was down. It's not because housing is down. It's because there's a shortage of inventory. I mean, there are some really strong pockets, some pockets of strength in the economy right now that should keep you confident. So this is why we're not getting a stock market that completely falls apart. But as a matter of personal finance, hang in there, keep investing regularly. If you are fairly young and you're investing regularly, believe it or not, a down market is your best friend right now. You want the market to tank, because then you get to buy shares cheaper. We shouldn't be doing things based on the stock market today. We should be doing things based on the stock market 10, 20 years out. All right, that's it. I'm going to go. No more comments out there, no more questions. I'll speak with you soon. Thank you very much for joining me.